Welcome to this edition of Diligence Inside America's Boardrooms. I'm TK Kerstetter and I'll be your host for today's show. Today we're going to talk about M&A. In fact, a board's guide to effective M&A oversight for the board. And joining me as my guest to have this conversation, first of all, to my far right, somebody whose face is very familiar on the show. Please welcome Paula Loop, who's the leader for PwC's Governance Insight Center. Welcome back, Paula.
Thank you.
And joining her is Curt Moldenhauer, who's a partner with PwC's Deals practice and the U.S. leader of Deals Solution. Welcome, Curt.
Thanks, TK.
So this topic of M&A can be quite complex, and as we know, every company is unique. So that means that sometimes you attack things in a unique way, but particularly in M&A, I think it's good to have a good foundation to build your unique sort of strategy and plan on. And certainly from the board's perspective, I think it's important to, in their oversight responsibilities, to sort of be aware of this foundation as well. So I know PwC in your website, in your Governance Insight Center website, you have a whole series on M&A, and in fact, I guess your most recent paper is on Deal Solution, is that right, Paula?
Deal strategy, right?
Deal
so
strategy.
Having that strategy around deals.
Yeah, so we'll talk about where somebody can get a copy of that in a minute. But Curt, let's start with you since you're sort of the resident expert here. So we all know how important it is for the board's role in overseeing M&A strategy or growth strategy. And for many companies, M&A is certainly a big part of their strategy plan. As someone who works with M&A all the time, how do you think about the relationship with M&A and the board?
TK, M&A continues to be a prominent element of the corporate agendas, but it also continues to be one of the most challenging aspects of a corporate strategy. And in fact, we know this from study after study that suggests that companies aren't necessarily getting to their desired outcomes on their transactions. In our view, the board has an absolutely critical element of helping companies both create and protect the intended value on deals. And I think about that on two basic dimensions, one of depth and one of breadth. On the depth dimension, it's really important that boards are involved in every step of a company's inorganic growth process. And that starts with a comprehensive review of a company's M&A strategy. A multi-year M&A strategy that's closely linked to a company's overall corporate strategy helps prevent management from being reactive in their approach to deals. A board should also do a deep dive into the external environment when they're looking at the M&A strategy. That includes economic factors, capital markets, as well as the regulatory environment. Boards should then continue to work with the company as they execute on deals, reviewing key deal terms and understanding the strategic fit of that asset into the overall strategy. And lastly, boards should continue to be active with respect to post-deal integration. And that's interesting because normally we see a bit of a fall off in terms of board participation during that phase, but that can be the most valuable to a company in terms of overall value creation. And then with respect to this breadth aspect, another best practice with respect to M&A is to have a portfolio approach. And a portfolio approach involves three key levers in a transaction: acquisitions, divestitures, as well as alliances. And again, too often what we're finding is that management teams are only focused on the acquisition part of the equation, yet successful corporate deal makers are definitely actively divesting unwanted assets, ones that are potentially underperforming, or ones that don't even fit the strategy anymore. So again, board members should be very active in talking to management about the current portfolio of assets and whether or not the company's still the best owner of that asset. Lastly, board members should be very active in talking to a management team about alternatives to acquisitions, and that includes alliances. Alliances are even more used now than they were 10 years ago in terms of corporate deal making, especially when a company's entering a new market, embracing a new technology, or looking to preserve capital. So again, TK, on an overall basis, boards should be involved at a very deep level and a very comprehensive level.
Yeah. And I echo your comment about portfolio management and really thinking about it not just about acquisitions, right? I mean, I think board members for the most part get involved when there's going to be a big deal, big acquisition. But one of the things I don't see them pushing on management is whether or not there's something that maybe they should be divesting of. That's always a harder conversation. And frankly, if they're not doing it, certainly activist investors, we know hedge fund activists will come in, and that's very often one of the things that they've looked at is whether or not you are the rightful owner for all of the different assets. So,
Well, investors are always pushing to make sure that somebody stays with the deal long enough to prove that there's value
Yeah.
with it. Too many times people sort of mentally exited, I think, and were on to the next thing before that value was recognized.
That's right.
The other thing that's interesting to me is with digital transformation, I think that has hyped up M&A only because if you don't have it resident or you don't have the knowledge resident, that's a great way sometimes to get the knowledge, and that sort of picks the pace up. And it gets to your point, there's other companies then that don't fit very well in that environment that you may want to divest. So,
yep.
Curt, let me dig just a little deeper on the portfolio part because that's interesting. When you're looking at it today, any special trends that are happening with people's portfolios that you might want to?
Well, I'm going to immediately pick right up on your technology point, TK, because again, I think the number one, there's a lot of factors involving with the deal environment right now. You have trade issues, you have the regulatory environment, but again, the number one inquiry we get from a practitioner standpoint is around technological feasibility and disruption. We're also seeing a lot of activity in and around the so-called fourth industrial revolution technologies. Those are AI and cloud and analytics and IoT. And you see this trend, in fact, in the fact that the tech sector itself is still the top sector with respect to deal volumes in the US. But here's the interesting thing, and to your earlier point, it's not just technology companies that are doing these tech deals. Non-technology companies are about 1/3 of overall tech deal volumes. And again, here's what the board really needs to focus on when they're assessing these technology deals: revenue synergies and talent integration. What we have found in our experience is that front office integration on these deals can be really problematic and really difficult. This is especially true for the non-tech companies who might be faced with a business model that they don't understand or a revenue model that they're not familiar with. So the board should take a cautious look at any revenue synergies with respect to the transactions. Second, a primary objective with a lot of these deals is the creation of both a stable and enticing environment for the new talent, especially on these tuck-in deals where the primary objective is acquisition of talent. So again, the board members should be focused on dialoguing with management on the post-deal integration of that talent, especially around communications and culture.
So Paula, you spend a good part of every day worrying about how you can make the board more effective. And when you see the board's role of overseeing deals, I'm sure you see an environment that's very challenging for them. So what would be some good, as we said, foundational practices or things that they shouldn't forget with their responsibilities?
Yeah, no, so first of all, I would always encourage the board to step back and think about when you're doing the strategy conversation, that's when you really ought to be talking about portfolio management and thinking about it at a much broader level. The boards, I think, that are challenged are the ones that are waiting for the company to come to them with an acquisition, a transaction, and that's really just transactional review, and that's not really getting to the heart of what you're trying to do. So making sure you go all the way back to what's the portfolio, what do we want it to look like, what do we need to add to the portfolio, what might we maybe want to get rid of, what can we supplement with an alliance or a partnership or joint venture or something. So making sure it all goes back to that. So that would be my starting point. And I think whenever strategy comes up in the boardroom, and it should be coming up now more likely than not, again, portfolio management should be part of that conversation. And thinking about if you are looking for a transaction, an acquisition, who are the candidates, what's the process there, how's the board going to be involved, making sure that all that is laid out in advance so the board doesn't get blindsided with, we need to have an emergency call because we're about to do a deal and sorry, it just came on us so quickly, we haven't gotten a chance to get you up to speed. The board should already be grounded in some of that before they get to that point. So, and then on the divestiture side, what's it worth? Talking to bankers, understanding what the value is, maybe things you need to correct or supplement before you put it up for sale, but then once you do, what's the whole sale process and how's the board going to be involved in that? And then I think last but not least, Curt, you mentioned it a lot, but integration.
Huge.
So critical. So many companies, I think, can say that, of the last 10 deals they did, X percentage, which is not a high number, went well and really brought in the synergies they thought it would. And a lot of this is because they're not doing a lot of thinking around the culture, I think, and the talent. And that's so much more important than we realize. And so we're seeing more and more boards really push management around doing a culture audit of some sort to really get a sense of what's this new business like and how is it going to really mesh with ours and how are we going to make that work.
Lets me reflect back on shows that you and I have done on making sure you have the right people in the boardroom for going forward. We've just touched on a number of areas that you want to have people that have been there before with M&A, that understand at least a little bit about digital transformation. And here are things where that's the tough call for a board to say, okay, do we have the right people in the room? And if not, how do we get the right people in the room?
Yeah.
And TK, it's an opportunity for the board members to also help with management education, especially as they go into a sector like technology where they may not be familiar.
Yeah.
Well, I want to thank you both for taking the time to join us. I think we did set a good foundation. And Paula, where can people get to see a copy of the series? Because the series is not only the deal strategy piece.
We have other papers. We have a paper on acquisitions. We have a paper on divestitures. There's one on alliances and so forth. The series is all on PwC's Governance Insights Center website, and the last one in the series is deal strategy, and that may be the most important one to start with.
Yeah.
Yeah.
Well, guys, thanks again for joining me, and that will conclude this edition of Inside America's Boardroom. We hope you enjoyed the show. We'll be back again next week when we take another look at a critical topic that'll help you be a better board member or committee member. So we'll see you then.